Hello everyone, welcome to the Ichimoku daily analysis for gold for Monday, April the 19th, 2010. Well, quite a change of character for this market today. And the previous day's trading session we had a very large red body candle, and it had been some time since we'd seen a very large red body candle. But all of that bearishness that we had in the market previously has evaporated. We have a very small body to this candle. It's almost a doji type candle with the no body, where the open and the close are virtually in the same area. This long shadow on the bottom of the candle represents upside price rejection, and that's little wonder that the buyers came in around this area, because there was support shown around the Kijun-sen at 11.27. We know that when this Kijun-sen tends to turn flat, it tends to be an attractor of price action, and that's what happened in the previous day's trading session. The market tested that level again, and the buyers came in once again to close the market back up towards the high. So on today's trading session, the sellers have certainly lost all of the commitment that they had when they traded down below the low of the previous candle, and certainly below the Kijun-sen. So the buyers came in quite good force. They've closed the market up towards the high, suggesting that on the day's trading, the buyers have closed the market in control. They have, however, failed to close the market up above the previous close. The sellers have retained some of the keenness that they had on the previous day, although they were extremely keen, because the distance between the close and the previous close was much larger than today's trading. And today's close is very much almost at the previous close, so certainly significant that the sellers have lost a lot of the keenness that they had. So there is potential for a change of trend to the upside, so we do need to watch the high of the current candle, which is at 11.38, for a potential new first time frame uptrend. So confirmation would be a candle with a high and a high low. Now the market is trading up above the cloud, so we have an overall positive bias to the market. It's trading up above the Kijun-sen, which means that the market retains its bullishness in the medium-term time frame, but it's still trading down below the Tenkan-sen, and that reflects bearishness in the short-term time frame. So the market really hasn't regained that bullishness in that first time frame that it had. We will need to watch that area over the coming few days. If the market does trade to the upside and we have a new first time frame uptrend, then the Tenkan-sen may potentially offer resistance. That's at 11.47, so we do need to watch how the market interacts with that level. But big picture bullish. Look for potential for a higher high and a higher low. If that fails, watch the low of the current candle for the market to potentially test the cloud, which is down around the 11.08 region. If that area is tested, be prepared for a potential breakout to the downside, and that would give us a bearish market overall, although we wouldn't need to watch that, because we do have a flat cloud, and breakouts from flat clouds can be false breakouts. So if that does happen over the next few days, we do need to be prepared for that, and consider whether we would want to take that sort of signal. But we don't want to preempt ourselves. The market is trading down. There is potential for a change of trend, because the short-term dynamics don't support the downside trend.